Welcome to Financial Insights in Minutes, the place where we break down complex financial news for your busy schedule. Today's hot topic is Bitcoin about to explode to $100 in the next bull cycle. We'll dive into what our experts think.
Stay tuned as we explore insights from top crypto personalities and their predictions for 2024.
Let's uncover which economic and political factors could fuel this potential surge and when you should prepare to act. Here's what we'll be diving into today. First, CryptosRUs reveals Bitcoin's impressive recovery and upcoming economic changes. Next, Altcoin Daily discusses how political dynamics may affect Bitcoin's market trajectory. Crypto Banter explores Tron's rise as the next big altcoin, joining the ranks of Solana. And Coin Bureau explains the yen carry trade and its catastrophic impact on Bitcoin's price. Lark Davis breaks down the bullish sentiment as Bitcoin holders must act quickly with market changes. Benjamin Cowen analyzes the Pi cycle top indicator and what it means for Bitcoin's price trajectory. Ivan on Tech delves into the banana zone. Could Bitcoin's sideways trend soon give way to a major breakout? Finally, Crypto Casey examines historical trends and argues Bitcoin could hit $100 in the next bull cycle. Welcome back to CryptosRUs. We've got huge news in the world of Bitcoin today, charmingly reported by none other than George Tung.
That's right. In today's episode, we dive deep into the new Bitcoin updates and the implications they hold for the cryptocurrency market.
So what's the big takeaway from today's news? What's making waves in the Bitcoin sea?
The core thesis revolves around Bitcoin's impressive recovery above $60,000, coupled with revised labor statistics which suggest economic downsides, pushing for a potential interest rate cut.
Let's sail through those key points. What's the scoop on economic factors?
Well, the U.S. Labor Department cut job growth numbers by 88,000. That's a massive drop and points to significant weaknesses in the economy.
And what about interest rates?
The market is buzzing with predictions of an interest rate cut next month with a strong 83% chance of a 25 basis point reduction.
Now on to Bitcoin's performance. What's noteworthy there?
Bitcoin blew past $36.6 trillion in transactions last year, surpassing both MasterCard and Visa combined. That's impressive resilience.
And what do we know about predictions for Bitcoin?
Historical data suggests a potential parabolic rally may kick off in the fourth quarter. If history repeats, that could mean significant gains ahead.
Also, what's happening with altcoins?
Ethereum's ETF is nearing $1 billion in net inflows, and Polygon is riding the wave of support from Coinbase for its migrating users, pushing its value higher.
Let's look at the crystal ball. What are the predictions coming out of this discussion?
We can expect the Fed to cut interest rates further due to economic pressures. This could trigger a renewed investment rush into cryptocurrencies.
And what about market rally predictions?
If Bitcoin breaks through resistance levels, we could see prices soar above $73,000, particularly with so many short positions waiting to be liquidated.
So, what are the top takeaways?
Bitcoin's resilience above $60,000 is encouraging despite troubling labor reports. It's a pivotal moment for the crypto market.
What are your thoughts on Bitcoin's rise? Can it hold above 60,000?
Drop your predictions and comments below. What do you think about the upcoming potential rally? We're all ears.
Welcome to Altcoin Daily, your go-to channel for crypto insights. Today, there's excitement in the air as Bitcoin is on the rise. But why is it exploding now?
Absolutely. We're witnessing some peculiar market dynamics linked to political wins. The mainstream media seems to be more focused on the Democratic National Convention than on Bitcoin's sudden surge.
So what's the core thesis here? Why Bitcoin now?
The thesis revolves around the concept that Bitcoin's rise is tied to the anticipation of either a Trump or a Kamala victory, both of which could have different implications for the crypto market.
Let's get into some key points. First up, market reactions. How are these political tides affecting Bitcoin?
Bitcoin seems to be reacting positively to the idea of a Trump victory, since he's considered a pro-Bitcoin candidate. A victory for Democrats could mean more spending and consequently more Bitcoin as an investment.
Interesting. What about the differing perspectives within the political parties on cryptocurrencies?
The contrasting viewpoints are significant. While a Kamala presidency may spur Bitcoin through massive spending, Trump's focus leans towards innovation benefiting Ethereum. It's all about evolution in the crypto space.
Let's talk supply and demand. Why has Bitcoin experienced recent sideways movement?
A supply overhang from events like the Mt. Gox bankruptcy and recent government sell-offs put pressure on Bitcoin. However, the influx into Bitcoin and Ethereum ETFs indicates rising demand.
Now, predictions time. What are the price forecasts for Bitcoin and Ethereum?
Experts forecast Bitcoin to clear $70,000 this year, while Ethereum is likely to bounce back to $4,000. Exciting times ahead.
Let's talk predictions. What can we anticipate for Bitcoin and Ethereum?
The consensus is bullish. Bitcoin might surpass $70,000 and Ethereum could reclaim $4,000. These movements typically herald an extraordinary alt season.
And what about institutional interest?
BlackRock and Fidelity are smashing records with unprecedented inflows, indicating a strong institutional appetite for crypto. The growth of ETFs signals a change in investment strategies.
To wrap it up, what's the overall takeaway here?
Political dynamics play a pivotal role in shaping market sentiment, affecting Bitcoin and Ethereum's futures significantly. A lot of factors are at play, but there's no denying crypto's growing grip on the investment world.
The big question looms, is now the time to invest in Bitcoin?
Absolutely. Since prices are likely to rise, consider taking a dive into this opportunity. What do you think? Will you buy Bitcoin now? Sound off in the comments.
Welcome back to Crypto Banter. Today's hot topic, is Tron the next Solana? After making waves with Bitcoin's fluctuations, we dive deep into the potential of Tron as its market cap catches attention.
Absolutely. With comparisons to Solana emerging, connecting these dots is essential. Given his expertise in cryptocurrencies, the information shared today can help viewers make informed trading decisions.
What's the core idea we're exploring today?
The crux of it is that investing in Tron now could mirror the opportunity seen with Solana before its massive rise. We need to analyze its current fundamentals and market position.
Let's break down the key points. What about Tron's market cap?
Currently, Tron is positioned with a market cap of $14 billion, significantly lower than Solana's, which is about $80 billion. This gap suggests room for growth.
What role does Justin Sun play in this?
Justin Sun is fully on board with promoting meme coins, which has recently contributed to Tron's rising visibility and transaction volumes.
How does Tron fare against other altcoins?
Tron is drawing attention amidst many lackluster altcoins. Increased user activity signifies a potential rally.
Any risks associated with investing in Tron?
Yes, the oversaturation of meme coins could dilute the excitement. Plus, the overall market conditions are uncertain.
What are the predictions looking like for Tron?
If Justin Sun successfully leverages the current market interest, Tron could very well reach new heights akin to Solana's earlier success.
And what if the market trends upwards?
In the event of a revived bull market, Tron is poised to lead the charge among altcoins due to its current positioning.
So what can viewers take away from today?
Consider Tron's potential as you weigh your investment options. Timing will be essential. Drop your thoughts in the comments.
What's the final word on investing in Tron?
Stay alert and engaged with market movements, and don't hesitate to share your thoughts on Tron's future in the comments below.
Welcome to Coin Bureau's latest video. Today we're diving into a topic that shook the crypto world, the yen carry trade crash.
Indeed. This crash wiped out trillions and even brought Bitcoin down below $50,000. Buckle up, folks. It's going to be an interesting ride.
So what exactly is the crux of this video? What led to such chaos in the markets?
The central thesis revolves around the yen carry trade, which imploded due to massive leverage and market reactions, causing a liquidity crisis that shocked numerous asset classes, including Bitcoin.
Let's break down the carry trade phenomenon first. What is the basic idea?
It's straightforward. You borrow cheap yen and invest it at a higher yield. But this strategy can lead to serious market distortions.
And how did the markets react during this turmoil?
In a panic, the yen lost about 1/3 of its value against the dollar, initiating a massive sell-off across markets.
What about Bitcoin's role during this crisis?
Bitcoin plummeted 30% in early August, showcasing its reaction during liquidity chaos, yet it also recovered impressively soon after.
What predictions does the video suggest for the future?
Expect ongoing volatility as interest rates adjust, but Bitcoin might emerge as a solid asset in the long run due to its liquidity.
What are the potential market recovery signs?
As Japan shifts towards rate hikes, traders might see a stabilization of the yen, impacting future carry trades.
And what about the long-term outlook for cryptocurrency?
Bitcoin may gain traction as a safe haven, but regulatory scrutiny could ramp up on crypto markets following such volatility.
To wrap it up, what can we take away from this crash?
The events underscore the fragility of financial markets when exploited through leverage. It's a crucial lesson for traders to stay cautious.
What risks do you think traders face with leverage?
Sound off in the comments. Let's hear your thoughts on leverage in trading and its impacts.
Welcome to Lark Davis's YouTube channel, where we're diving into the latest in cryptocurrency. Hold on to your hats, because the clock is ticking for Bitcoin holders as we explore what's brewing in the crypto sea.
That's right. Today we'll be talking about potential market movements as rate cuts loom and the dollar index falls. With all this macro news around, crypto enthusiasts better keep their eyes wide open.
So, what's the core thesis here about the crypto landscape?
The thesis suggests that as the dollar index continues to drop, risk assets like Bitcoin may gain momentum, sparking significant moves in the crypto markets.
Let's dive into the key points. Starting with market trends, what are we seeing?
The uptick in Google search trends indicates a potential resurgence in Bitcoin's popularity following the dollar's decline. Bitcoin often serves as a bellwether for the market.
And what about any significant upcoming events?
There's a spot ETF for Ethereum launching soon. Meanwhile, the regulatory environment is fluid, which can heavily influence market pricing.
Interesting. Now, how are economic indicators affecting sentiment?
Revisions show a sizable downward adjustment in job additions alongside rising unemployment rates, indicators sparking concerns for a potential recession.
What's the community sentiment right now?
The speculative nature of the market seems to hinge on meme culture, even as many call for practical regulations to support the industry.
Now, what about future growth expectations?
Current trends suggest that we might be gearing up for an altcoin season, with bullish indicators for the first quarter ahead.
Looking at predictions, what's on the horizon?
A significant rally for Bitcoin appears likely as the dollar index dips below 100, possibly impacting broader markets too.
Anything in the political landscape affecting predictions?
Yes, political movements and regulations can certainly sway market dynamics, especially with elections coming up.
As we wrap up, what should our viewers keep in mind?
The takeaway is clear. With the clock ticking, it's time to act and keep up with market changes. What are your predictions on Bitcoin's next move? Comment below.
Welcome back to the Crypto Navigators channel. Today we're diving into a fascinating topic, the Pi Cycle Top Indicator for Bitcoin. Our expert today is the one and only Benjamin Cowen, a leader in crypto analysis and the founder of Into the Cryptoverse.
Absolutely. Benjamin breaks down the nuances of the Pi Cycle Top Indicator, originally crafted by Philip Swift. Stick around as we explore its implications in today's market.
So what's the core thesis during today's exploration?
The main takeaway is that the Pi Cycle Top Indicator might not function the way it historically has, and Bitcoin may be showing a pattern similar to 2019, suggesting we should approach upcoming market cycles with caution.
Let's get straight to the facts. Can you explain the Pi Cycle Top Indicator for our viewers?
Of course. It's based on two key moving averages, the 111-day exponential moving average and the 350-day simple moving average. When these two cross, it's believed to signal an impending market top.
And how does this relate to previous market cycles?
Good question. Benjamin highlights that the current market conditions resemble those of 2019, where Bitcoin's price fluctuated above and below key moving averages, which suggests a potential repeating trend.
Interesting. What's the current situation for Bitcoin in relation to these indicators?
Currently, Bitcoin's price has dipped, raising questions about whether these moving averages will cross as they have historically, or if the trend will change this time.
What predictions did Benjamin make regarding future market behavior?
He speculates we might see lower highs this cycle and questions whether the moving averages will ever cross based on diminishing peak trends observed previously.
So what's the advice for investors looking forward?
Benjamin recommends a cautious approach. advising viewers to be prepared for potential delayed peaks and to remain vigilant in monitoring these indicators closely.
Bringing it all together, what's the key takeaway for our viewers?
It's essential to understand these indicators from multiple angles. The Pi cycle top indicators' changing dynamics suggest that merely relying on past data might not be sufficient. Stay informed and adaptive.
What do you all think? Is it time for a cautious approach to Bitcoin investing?
Drop your thoughts in the comments below. It's always great to hear different perspectives on where this volatile market could head next.
Welcome aboard to Ivan on Tech. Today we're diving into a wild discussion on Bitcoin and its current state.
Absolutely. We're in what Ivan calls the banana zone, a crucial moment for crypto and Bitcoin enthusiasts. Buckle up as we explore this exciting territory.
So, what's the big takeaway from this latest episode?
The main thesis is that Bitcoin is currently in a sideways trend, but is about to enter a phase of significant growth, dubbed the banana zone.
Let's break down what Ivan discussed. First up, the current market conditions.
Right. Bitcoin has been hovering around 60,000 for quite some time now, which feels like Groundhog Day, but it's a classic sign of the calm before the storm.
Now let's discuss the political landscape affecting Bitcoin. What's the scoop?
If Trump returns, massive tax cuts might stimulate the market, but Kamala's proposed tax increases could negatively impact Bitcoin and other investments.
What's the vibe in the market right now?
Investor sentiment is quite negative at the moment. Yet, history shows that when most are bearish, it could actually be a setup for a potential rise.
What about the emerging trends in crypto?
Definitely. There's a surge in AI projects within the crypto space, but there's also growing concern over the fragmentation caused by Layer 2 solutions.
What does Ivan predict for Bitcoin's price?
He suggests Bitcoin could soar to $150,000 by December, but acknowledges the uncertainty in the short term.
And what about the predictions linked to politics?
The political landscape will definitely influence investor confidence. Tax hikes could drive investors to seek better conditions elsewhere.
To wrap things up, what is the key to take away from this discussion?
In essence, Bitcoin's future hinges on market sentiment and political movements. Investors should be keenly aware of these factors.
What's next for Bitcoin? Any last thoughts?
Only time will tell. What do you think? Comment below with your predictions for Bitcoin's next moves.
Ahoy there, crypto enthusiasts. Today's hot topic: can Bitcoin actually hit $100,000 by 2024? Fasten your life jackets as we navigate through this intriguing market analysis.
Absolutely. Our expert dives into the fascinating bull cycle dynamics and what history tells us about future trends. Let's get straight to the facts.
So, what's the main forecast we're diving into today? What's in store for Bitcoin?
The core thesis is that if Bitcoin follows historical trends, we could see a peak anywhere between 2024 and 2025, with the possibility of reaching $100,000.
Let's break down those key points. What's going on with Bitcoin's current price?
Bitcoin has been hovering around $60,000, consolidating between $55,000 and $70,000, showing signs of strong market support.
Now, tell us about the historical cycles. Why is that important?
After past halvings, Bitcoin reached its high around 75 to 80 weeks later, followed by substantial price corrections. It's quite the roller coaster.
And what about profit strategy?
As the cycle warms up, a clear exit strategy becomes crucial so you don't end up holding someone else's bags when the crash comes.
Tech is evolving too. What's happening in the tech world?
Crypto transactions have outpaced traditional payment systems, and Ethereum's fees have dropped to a staggering low of just 5 cents, making it more accessible.
And what are some predictions looking forward?
Expect price fluctuations, especially around the US election. The emergence of high-quality blockchain games can also play a pivotal role in driving participation.
Now, what's the scoop on Bitcoin hitting $100,000?
If history repeats, we could see Bitcoin hit that price around the election in November 2024. Timing is key.
What about upcoming technology? What's on the horizon?
Innovative blockchain games are likely to onboard a wave of new users, altering how we interact with crypto technology.
So, to wrap it up, what are the main takeaways?
The market conditions suggest we're on the path to significant BTC highs, but it's crucial to implement profit-taking strategies to avoid potential pitfalls.
Given all this info, how are you preparing for the next bull cycle?
Get in the comments and let us know your strategies and predictions for what Bitcoin will do next.
As we wrap up, we've heard some compelling arguments from our experts.
Indeed. From understanding political influences to recognizing the historical significance of market patterns, it's a complex landscape.
But one thing is clear. Whether you're bullish or bearish, being well-informed is key to navigating the crypto waters.
Absolutely. Let us know your thoughts in the comments below on Bitcoin's future and your investment strategies.
Thanks for watching Financial Insights in Minutes for August 22nd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.